and welcome to the webinar. Thank you for joining today. It's a pleasure to have you have you along. And if you've been to our previous webinars, thank you very much indeed as well. Glad to see you back yet again. Let's take a little look. Bear me just 1 second. You'll have to forgive me because I have a computer issue today, which is why you don't see the MT4 platform in front of you, which is why you see this free service chart in front of you. So please bear with me. That will be back up and running. That's my computer, my own technology fault there, rather than anything else. So please forgive me about that. But what we're looking at today, and we'll go through our normal routine. We'll look at the markets, look at how these markets are moving at the moment, and then we'll get on and look at exactly what we're here for. We're looking at candlestick charting, and again, I'll go for about half an hour or so, maybe slightly longer, maybe slightly less, see where we get with it, but yeah, so we'll go through. So let's take a little look at the markets. Just want to show you this on the right hand side here. And again, I apologize, this is not my own setup. This is not my setup I would usually have. So just please excuse the fact that we're using this at the moment. But on the right hand side, you can see markets looking a little bit calmer today. So after the weekend, after the big movements that we had on Friday and last week, because remember last week we saw a real big moves on financial markets with stock markets going higher, and you can see this is the turnaround that we saw on last week. So 1, 2, 3, 4 days. So Tuesday, Wednesday, Thursday, and then Friday saw a sell-off on Friday. And the reason for that sell-off was mainly due to the fact that we're seeing that we was always going to see, really. We was always going to see a degree of selling because people are just reluctant to take positions over the weekend. And that's understandable, I think, because there is always the potential, and okay, we didn't see anything necessarily that drastic this weekend, but there is always the potential in a time like this when markets are so fundamentally driven, when they're so focused on the fact that we're looking at one story dominating, that when we do get to a point like that, there is always that worry that something could come out and come out of left field and really take us by surprise. So that was the worry, and of course that's why people were selling off these markets on Friday. So with that in mind, we saw the S&P jump up a little bit. Let's go take this back into look at an hourly chart. You can see this chart from this was the 23rd, so this was last Monday, and this is the upside that we've seen. Yes, we dipped back, but we are slightly higher again today. But what's it done? Well, it's put in a few different I don't really know how to use these charts, but it's given us a few opportunities looking at the analysis of what's going on. So we've seen markets rallying yet again today, and that's given us these opportunities and the potential upside. So if we take that in, that's hourly. So I think on a 15-minute, we've probably got quite a nice little level up the top here where this is approaching. Let's look at this. So yeah, we'll look towards these highs just there. Yeah, that's looking. In fact, what I'm going to do, I'm going to remove that and let's do this. Okay, so we can see that this high within here is going to be probably quite a nice important one over the next few hours or so. And this is the the narrowing formation. This is just on the S&P, so this is giving us sort of the basics of where we are. And this move to the upside is probably going to. This is only going to be a second touch, maybe a third touch. It could double top for us here. We wouldn't call this a top because it's come off of these highs. So we'd probably be looking at this area. If it comes back up here, then yes, maybe we would look to then make a decision if it starts to reverse. But if it breaks, if it breaks out of this, I think we look towards, again, probably up towards these highs here. That would be our area that we need to look out for. 26.11, 25.73 is this area here, and we're 25.62 at the moment. So that would be our S&P on the 15-minute chart. Going 30 minutes, just see that in a bit of a clearer picture. Guys, remember, if you do have any questions at all, then please feel free to ask. Please feel free to put your questions across. Happy to answer anything that you've got. So that's where we'd be from that point of view. Let's look at the Dow. We always like to look at the Dow on a daily basis. Similar, obviously, it's a similar story, but the Dow's a little bit more under pressure. But this is not opened yet, because remember, this market's open in half an hour. So if we're looking at one that's already open, you can see here. This is the Dow on the cash price. Yep, Sterling Aussie and cable. I'll take a look at both of those in a moment. So markets looking on the Dow, 30-minute chart. We're probably looking down here. Probably looking at a touch there, but it's a very similar story, isn't it, to the to what we see on the S&P, to be perfectly honest. Not too much going to be too much different in this chart than what there is there, but you've got that narrowing formation on the 30 minutes. That's narrowing in, but yeah, again, trading slightly up, very much the same as the S&P, up 1.2%. Let's look how European markets are trading, and they are up. FTSE's up, the DAX is up 116, sterling up, cable up. Let's look at some of those that people were talking about there. What did we ask for? Let's have a look. Sterling Aussie and cable. Let's look at cable first. Cable. Let's look at it. Where is it? Let's look at cable. That's 30 minutes. Let's go daily. Again, that's hourly. Let's go daily and look a bit longer term to start off with. That's the V reversal we're looking at the moment. Now, there's a lot of discussion about whether there's a V reversal or whether we're getting potentially getting a L reversal or what sort of shape it is. We always talk about shape. Let me just show you this. We talk about a V reversal is obviously that. That's what we're seeing. This is what we're seeing here. An L reversal is where the market comes down and then up and then sort of does that. So it's down and then it's a long. Okay, so V reversal up. And then we have a U reversal where market comes down, has a little bit of sideways, and then goes up. Okay, so they're our three. It doesn't mean anything, VLU, but V recovery, L recovery, U recovery. That's what we look at. That's what people are asking about at the moment. Well, and obviously in this on sterling at the moment, we're looking at a V recovery, aren't we? Very clear. A V recovery is what's happening there. But elsewhere, if we just flick elsewhere, we've been looking at the likes of that S&P and the Dow. People talking about potential L recovery because saw a bit of downside, but the markets are very a bit all over the show today. We don't really know where they're going. So daily cable, going back to what someone was asking me about, daily cable, we are potentially big V within here. Let's bring it in. Let's go hourly. Hourly, very, very strong. You can't get away from it, can you? There is very much, that's very strong. So we take our low here, put it in there. So testing that, coming down. 1, 2, 3, looking at a full test at the moment. If that does break, if that does bounce from there, then we look towards obviously these highs at the top here. I'd say there. So you've got that narrowing formation, and this is what gives us buying and selling signals, and this is where we look to go in. Now, today's our brief topic, obviously we like to have a bit of markets and a bit of educational stuff, and we're talking today. We're talking candlesticks. Now, basic candlestick charting. Now, candlesticks obviously is used mainly for the patterns that we look at, but there is also a basics of candlestick charting as well, and I want to show you the basics of candlestick charting, and sort of talk to you about what you're looking at mainly most of the times. Let's have a quick look. I'm just trying to find something here. So this first of all just give you a little bit of background information about what candlestick charting is. Now, candlestick charting is very, very old. It's a very, very old form of looking at markets and plotting plotting bars and plotting data on a chart. Now, it's a form of a bar chart. So a bar chart, let's have a look. If a bar chart, I'm going to change to a bar chart. See, so here we go. So if a bar chart is this, and let me zoom you in. So a bar chart is this. So green bars, red bars. You can see both of these. Now you have a line out to the left, a line out to the right here on a green bar. This bar to the left-hand side is the open price. On a green bar that goes up means the market went up. That's the close price. Then you've got the high and the low. Simple. And again, on the down candle or down bar, you've got left-hand side, which is here, this flat line. That's the open because it's down, close, high, low. Okay. So, and on this one at the moment, this is moving. This one's moving because the candle's still open. And we've got how long? 46 is an hourly chart. So we've got 46 minutes left of that chart. So that would be your bar chart. Now, what a candlestick chart is basically just the Japanese version of this. Okay, so it's called candlesticks, and this is the same situation. Gives us a little bit, it gives us exactly the same information, doesn't give us anything more. So you can see here, green candle, very same candles, flat line at the bottom, open, top line close, highs and lows. Very similar here. But down candle is red, typically. Top line open, bottom line close this time, because of course it's gone down, highs and lows. Similar, top flat line at the moment is moving because candle's still open. Candle's got an hour left on it. So it is just the Japanese version of bar charting, and it was very popular, probably for the last 30 odd years or so. It's become really, really popular, but it's been around for a very, very, very long time indeed, very long time. But visually, it gives us an indication just of where it's basically a snapshot of giving us every sort of idea about where the markets are, you know. So that gives us more information, and that's what we like to look at, because everyone wants to see more information these days. You don't want to just be stuck looking at basics and basic information. You want to have the full picture, and candlesticks are thought to give you the whole picture, you know. So what we will do, just hold on a second. So there is I want to show you what basic candles are, and there's a couple of basic candles that we look at. So looking at cable, and I know I did say to you I'll analyze sterling versus the US dollar, and we'll look at sterling Aussie as well in a moment or so, but I just want to give you a bit more information about the candlesticks first, and then we'll apply them to this very chart here. So, so the situation that we have is that we look to the patterns to give us an indication of markets turning around. Okay, so that's the key thing that we look at. And what these give you, what candlesticks give you, is they give you an indication of trend reversal. Usually that's what we look at, but they generate market patterns, and that's something that is really really important. Now there's one key book that was written years and years ago, not that long ago, but about 20-30 years ago, maybe a bit longer than that now, but it's called, very basically, it's called Japanese candlestick charting, and it's almost the Bible of Japanese candlestick charting and how you do it. But it gives you just an indication of the amount of patterns that you can get when it comes to trading. But some of the major ones that we look at And I just want to try and find a couple to give you basically an indication of what we look at. But you have various different candles which are called various different things. Now I can see this one. Okay, so let me just highlight this so we know what we're talking about. So, draw. So I'm talking about this candle right here. And that is called a doji. Now that doji candle is when the price action in the middle, and for the whole of the period, so this period is a 1 hour period because we're still on an hourly chart. So on this 1 hour period, the price action was very volatile. So there was a big movement between the high and the low, but the actual price range was very small. So between the open and the close, the price range was very small, but the range on the day was very high. That's called a doji. Okay, now this is a long leg doji. Okay, so gives us a bit more of a much wider range on the session. But what we look for is this, to call it a doji. Now, statistically, or if you to look in the textbooks, a doji is supposed to be it's supposed to look like this. Let me draw it for you. So a doji is supposed to look like this: straight down, straight across. Excuse my drawing; it's absolutely terrible. But that should be a doji, and a doji would just look like a cross, and it would have no change between the open and the close. However, we can't really stick to that because the amount of candles that open and close at the very same, exactly the same price and don't change and have a big high and low, they don't exist, you know. So they do exist, but there's not many of them. So that would be a doji. But we look to this because this is gives us an idea. We'd also look to something like this. I would say that is a doji as well, even though we're still talking 10 pips between that 60 and 50, probably less, maybe it's about 8 pips between these two here. I would still call that a doji. Now, what we look at, a doji is it gives us a reverse. Oh, cool, I can't speak. A reversal indication. Okay, so a reversal indication in terms of the market. Okay, it says to us that there's indecision. So what this shows is indecision. What this shows is indecision. It shows that there are buyers willing to buy the market up to these high points. There were sellers who were willing to take the market down to these low points. However, in the end, for that whole candle, there was no real change. Okay, so there was no real change. So it showed that the market was indecisive. It didn't know whether it wanted to go up or whether it wanted to go down. So in the end, it didn't go anywhere. So when that's at the bottom of a downtrend, like we are in this situation here, you can see why that would be important, because it's showing that down day, big up day, down, these are hours, sorry, down hour, big up hour, down, two up, big down, then indecision, doesn't know what it wants to do. Now we would say that is that indecision is a reversal pattern. Okay, so it's a reversal indicator, that doji, and it gives us that indication that potentially the steam is starting to run out of the downside moves, and this market could look to go higher. Well, next candle did go higher. We wouldn't be trading there though, okay, because we'd be a bit worried, because we've seen this before: down, up, down, and up. But we've never seen it after a doji. So that would give us an indication. Then the market posted another doji, but on the downside. So you can see after a big down session, after an indecisive session, so big down session, indecisive session, big up session, then the market didn't want to go down again. Didn't want to go down for the second time. Then the market went higher, then the market went higher, down an hour, market still going higher. So you'd still look at that and say, okay, that looks a bit more positive. See, but the key thing is you add it into something else. So the point is that we click on here and let's undo that. Let's clear those off and let's see what the market's then doing. So if we zoom it out a little bit, you can see that we then add this into this, and we say, okay, well, I've got a trend line in place here that this low doji bounced off of after it came down low. Turn around, in line with this as a buying signal. Market's coming down to it again. Buying signal. Where do I rally up to? Well, there's a potential target there, 124.85. What we can also do is then we could add Bollingers, couldn't we? Now, how you add a Bollinger, I don't know on here. No, not that one. Indicators, probably. Let's just type it in, Bollinger. There we go, Bollinger Bands. So we add our Bollingers, gives us our price targets. This is just going through our 20-period moving average, which we spoke about. It's in the middle, it's a narrowing formation. This is a turnaround. That is our target. Coincides with our target on the upside, doesn't it? And as that market comes up, this will tick up as well. And that will be pretty much our bang on our target. So 3 things that are confirming our potential on this cable trade at the moment. Okay, 3 things that are showing us that could well be on the case. Could well be the case. So that's how we look at these formations. Now, we also look at something else, which is something like this. If we look at this formation here, again, just highlight that for you. So we're looking at this here. Okay. So this is a form of an evening star. Okay, an evening star on the upside. Now, again, it's another Japanese candlestick candlestick formation, and it points to markets turning round. And it's when you see an up day, a small candle on the upside, followed by a down candle. Okay, now we'd like to see that down candle a little bit bigger than that, but I don't like to always show. See, what I could do, and just bear with me one second. Just show you something in here. Evening star formation. Now, if I was to show you this on a website, and it would show you a perfect, here we go. Let's just, okay, right. So let's look at this then. So if I was to show you this on a, where's that gone? There we go. So if I was to show you this, that is how an evening star and a morning star are supposed to look. Okay, textbook. Okay, a textbook formation. You can see it because market is in here. Easy down, turn up. That up, turn down. Okay, so that's your evening star and your morning star. Evening star at the top of a trend, morning star bottom of a trend. Reversal pattern shows the fact that we had a big downturn, then the market's posted a doji, then the market's coming up again. Now that's all well and good, but in real life, we don't see them like that. And I think it's more important to look at these real life to see how they actually, I think how the market, how you're supposed to see these on the market rather than anything else. So if we look at this one, this is not perfect. So this is not perfect in any way, yeah? So we can see this, but it's how the market wants us to see it, you know? That's how it wants us to, that's how they will be produced. So it's not always a situation where we look at it one way or we look at it a different way. If we look at it from this point of view, we can say, okay, well, I know this is how they look. I know it's not as perfect as a textbook would look like. And so the situation shows us something different. Someone's asking me about a Harami pattern. So a Harami pattern, again, let me show you let me show you a textbook version of it. Here we go. Oh, no, I can't. A harami pattern is when you have a big candle one side, followed by a smaller candle, which is completely not, it's not engulfed, it's completely covered by the previous candle. Okay, let me just try and find one. I'm trying to find one for you. Trying to find one for you. Where can I find one? Ba, 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 ba. I can't find one. Why can't I find one? Anyway, let's find one on here. Let's find one within the market. We kind of got one. So we need a big candle. So a candle that looks like this one, that is then has a smaller candle next to it. Let's find one. I'm sure we will find one very, very soon as we go through here. Here we go. We got one. It usually has a gap to the downside, but we would look at them slightly differently. But we have a harami pattern here. This one. Now, usually we'd like this to be slightly lower and completely within the middle of this candle. We want something that's gapped a little bit, which we can't really find. If I have my other charts, I'd be able to find it perfectly for you, but needs must. I can't find one. Okay, let's take this out a little bit further. It's the problem when you're trying to find patterns. They kind of happen on a dome. But the question that's been asked here is a harami candlestick pattern always indicative of a trend reversal? Then yes, it is. Well, that's what the textbook would say. So the harami is showing us a situation where, again, we're looking at indecision, right? So similar to a doji formation, and the harami pattern is kind of a doji anyway, okay? So it's kind of a similar to a doji. Again, you look at this similar situation here, okay? Now we've got the upside, and then a smaller candle, and then the move from the other side, you know, so the market looking to come down. But it's not within this candle. This is more of a doji. Yes, okay, it hasn't closed at exactly the same level, but again, we have to give these things a little bit of breathing room when we're trading in them, and that turnaround is potentially happening within there. So, but yes, they are reversal patterns, and they happen at the top or the bottom of your trends. So that's what we look to do. That's how we look for these to happen. So we haven't got one here. No. I'm trying to find one for you. Here we go.
It's 14:30.
This is the textbook version. This is how it's supposed to look. Let's just share you here. There we go. This is what they're supposed to look like. So that is how a harami pattern is supposed to look like on a downtrend. Okay. So market coming lower from this lower point, looking to turn around here and jump in higher. Okay. Down lower, candle, smaller candle within here, completely engulfed by the previous one, and then moving on. Okay, so that's what we look like. That's what it looks like at the bottom of a downtrend. Now, on the other side, from the market going up, it looks slightly different to that, doesn't it? But just have the red candle followed by a bigger green candle, you know. So that's the smaller candle followed by the bigger one, you know. So that's how they're supposed to look. But you can see the basics of how these things are supposed to look. So from the harami pattern, that's another reversal. So let's try and put these into practice. And we were looking at sterling cable, weren't we? So this was our downside in cable. Let's take this back to an hourly. The trend was very strong. I don't think we'll see anything but a strong trend in any of these charts, to be perfectly honest. Here is another evening star. Okay, evening star reversal. Big upside, smaller, big downside. Evening star. Yeah. Morning star situation there as well. Big downside. Not quite a morning star, but still you can see the situation. Market higher. Any others? Not at the moment. Not at the moment. Anyway, so on this 15-minute chart, what are we looking at? Yeah, similar. This is our situation. We know this is in place. Move higher. This is our high on the hourly. Same picture, really. Same picture. Shorter term level potentially here, 124.40s, but lose that 124.85. On the upside, let's look at sterling Aussie. Someone asking about sterling Aussie. So the big sell-off in the pound, Aussie strength that we've seen over the last few hours or so. And that could potentially be, is that because of oil? No, because oil is still trading low. Because oil dropped below $20 for the first time. Oh, sorry, you're still looking at the Harami. Sorry, I apologize. It's my fault. Excuse me. Apologies there. Thank you for letting me know. There we go. Okay, sterling Aussie. Big move to the downside. Let's pinpoint some of our lows. Morning start, evening star at the top here. You see that? Zoom that in. Quite a nice one. Upside, doji, downside. Yeah, big sell-off, big stuff. It's only 15 minutes. So that level has to be down there. Looking at parity, aren't we, again, really? This is 15 minute. The big level is going to be down here. Has to be down at that low. At 2. That has to be our big level on the downside, and this is all the noise in between. So let's look at this on an hourly. Gives a bit more of an indication. That's your low level at 2, but you can see that this is strong from a lower point. So as this market rallies from here, what's our situation? Now we have broken out there, haven't we? Look, you can see this is a breakout happening. It's kind of a false breakout previously. I probably would have taken that into there. So market broke, upside turning down. And on the upside again, you've got this reversal, but hard to pinpoint. Tweezer pattern here. These are all of the candlestick patterns that we're looking at. Tweezer formation on the top side here. Tweezer is usually on the downside, so we sometimes see it, but there. A tweezer is when we have two big candles looking very similar to each other, one green, one red. That's a tweezer formation. Again, another reversal pattern because it shows big upside followed by a complete reversal. Now, we're getting a lot of those recently because of the nature of the markets. We get one swing one way, one swing the other way. So it's not too much of a surprise that that's actually happening. But we do get those big swings. So it's hard to pinpoint. So from sterling Aussie point of view, we do have a slight breakout, but this market's coming down. I don't like this. This was a 1, 2, 3, 4, 5, 6 point breakout. It's faked out too many times for my liking there. We look towards the upside level. What's the upside level? We've got the tweezer high there. It's probably going to be the one. We've also got a high in here. So we may well look at that first. So you've got almost two levels at the same time. Got that high there. We've got a few touches on the hourly chart there. So it is quite rangy, isn't it? It is quite rangy within here. We've probably got lows down at that point. You're in a situation where you've got first, second, third resistance going on here. Almost like showing you pivots. So you've got 1, 2, first resistance, second resistance in there. first support, second support within there. So you've got key areas where the market is acting up and giving us areas to trade. I would take this off now, most probably, because I don't like the look of it. So we look at that, and I'm actually going to remove that Bollinger as well. So it gives us a bit more of an indication of what's going on. And then, of course, you've got your third support is clear down at this lower level, these lows down here. So for sterling Aussie, you do have a few opportunities within there at the moment, because the market is starting to range. There are two currencies which have had a lot of upside as well over the last couple of days, because has been the markets have almost turned themselves, haven't they, a little bit, because we had dollar pressure. The dollar was under pressure last week after being safe haven ever since this crisis started, and sterling had been one of those that had been really, really overdone, as was Aussie, as was the euro as well, to be honest. So we did have quite a few areas where markets were very, very oversold, and that's why they've both been strong. And now you've got two strong currencies fighting against each other. You've got two things here. You've got sterling, who's just on recovery mode, and you've got Australia looking at they're snapping down a lot from their side of the coronavirus measures. So they've banned gatherings and various different things there in the last 24 hours, but we haven't seen a massive material change in anything. And one of the issues here is the fact that, okay, oil is going down, but there is China. Now, China, one of the biggest trading partners with Australia, China is starting to show signs that it's now coming out of the coronavirus, not necessarily completely being away from it, but the Hubei province has reopened for international flights. That's now happened over the weekend, and in Wuhan, now the lockdown has been lifted. It's been a few months, but the lockdown has been lifted there. So now we're in a situation where, okay, China may be starting to come back on, meaning there is potential that demand in terms of oil will start to go up. But however, we've got a load of airlines, which, when you look at how airlines are performing at the moment, airlines are a situation where, and one of those I just want to show you today on a stock from the stock side is EasyJet. Now, EasyJet, big sell-off there, a UK cheap budget airline. They have a look at the sell-off that they've had. This is the delayed chart, obviously, because this isn't our normal charts, but they have grounded all of their planes. Over the last 24 hours. Now, if you look at how airlines are performing and the fact that there's no flights being made, well, when there's no flights being made, it means that the oil for airlines is not going anywhere. And what it does is it means that there is, I think the estimation is around $5 million barrels a day, which is now not being used. So there is oil that has been pumped already, which is waiting and is now not being used due to the fact that airlines aren't selling them. So it's no wonder oil prices, where is the oil price? Oil prices, here they are. It's no wonder oil prices continue to fall. And we said, look, I highlighted this last week, is that these low points, this was a low. I remember highlighting this on the on our MT4, which I hope that I'll have back tomorrow. But on the MT4 side, you can see the big sell-off is really quite aggressive, and anything below $20 is really dire needs. Really is dire needs. Okay. Apart from that, guys, I think I will leave that there for today. Thank you as ever for joining the webinar. Apologies, there's a bit of an issue today with technicals because I don't have my normal platform up. But that's my fault. That's completely my own platform, which is the issue. But guys, it's great to have you all joining me every day at the moment. Excellent to see you all in. Excellent questions continuously coming through. So I love that. Get to answer as many as possible. So thank you very much for your time, guys, and I will speak to you
I'll speak to you tomorrow. Thanks very much.